Hello, thank you for joining us on Minds of Commercial Real Estate. Today we have Logan Freeman. Logan, thank you for being on the show.
It's my pleasure. I'm excited to be here.
You got what I want, got what I want. You give me just one look in, you know I'm good to go. You know I'm good to go.
Logan is a commercial property owner and a broker out of Kansas City. And he has years of experience of running, and managing commercial real estate properties, along with helping people find buildings that fits their needs. Logan, why don't you tell us a little bit about yourself?
Yeah, well, I grew up in Jefferson City, Missouri, which Cam, do you know that the capital of Missouri is Jefferson City? Not a lot of
I did
people.
not know that.
Yeah, not a lot of people do. So it's a tiny little town, man, but it was a really good place to grow up. I really identified as an athlete growing up. Had a lot of energy, a lot of passion, a lot of desire, and poured that into sports, which led me to a very successful collegiate career and a short stint in the NFL. And when I was cut from the NFL, it was kind of one of those crossroads in your life, right? It's like this decision point. Do you keep going down that same route, or do you go somewhere else? Do you take a right turn instead of a left turn? And I really felt like God had a different calling on my heart. I could have continued on with the 49ers, but I decided to go back to school, finish my master's program, and I needed some business experience, right? I'm getting an MBA, and all I had done up to that point was pour concrete, bale hay, and cook in a catering, kitchen, my whole life, right? So just using my body instead of my mind. So I took a job making 265 cold calls per day, driving 2 hours, so 1 hour there, 1 hour back. But I turned my car to the classroom on wheels. I think that was old Zig Ziglar. And I was listening to CDs, man. This is 10, 12 years ago. It was before podcasts, right? So I was listening to, John Lee Dumas, Lewis Howes, Tony Robbins, Jim Rohn, Zig Ziglar. And, I also lost 100 pounds. I was 335 pounds at the NFL Combine. And so I'd wake up at 4 a.m., go work out, go to work all day. And then I would come back and I would go to school all night, and I'd spend 12 hours in the library getting caught up on Saturdays, right? And I did that for 6 months. And I physically changed my body, but I think the bigger change and transformation really happened in my mind. And that's when I started to be opened up to books like Rich Dad, Poor Dad, and thinking about, just business in a different way. And so that's really what put me on this trajectory of getting into real estate. And I've been full-time in real estate since 2017. I was forcefully exited out of my last W-2 job. No kids at the time, so it wasn't a huge issue. But I wanted to go to work for myself. And so I started a sales consulting company. So I grabbed Inc.'s fastest 5,000 growing companies. I cold called the first 2,500 of them. And I figured if I have a sales consulting company, I better be able to generate business out of a list, right? And so these companies, 3 of them hired me, and they said, well, what do you do? I said, well, what do you need? So I was flying around the country, going to conferences. I was setting up CRM systems. I was training their salespeople. But at the same time, I also had been buying some houses here in Kansas City, living in them, doing the work myself, and then moving out. And I remember I was a franchise consultant with Jimmy John's at the time. Youngest franchise consultant they ever hired. I had 25 stores between Altoona, Iowa, Northwest Arkansas, and Kansas City, Missouri. And, I got my check from when I sold that house, and it was more than my salary. And I said, you know what? I think I'm in the wrong business. So I quit that job with no idea what I was going to do 2 weeks after that. And I figured it out, man. I've just figured it out. And that's led to me having 3 children, beautiful wife. I've worked in the startup community, and now I'm running a brokerage and a development shop called Midwest Commercial Real Estate Advisors. We do a lot of land and land consulting and development for data centers as well as small bay industrial. But we have team members. We have 9 team members across all asset classes. I have bought close to $250 million of real estate, owned it, managed it. I've sold some of it. And I've got a lot of war stories to tell. So that's who I am. I'm 36. I just turned 36 last Sunday, and we just got back from Costa Rica. So just living life.
Well, happy birthday, number one, and congrats on the amazing success story. I hope it continues for you throughout.
I appreciate that, but also I want people to know like that there's there's peaks and valleys. I've had very tough times. We've gone through the COVID-19 pandemic. We've gone through the fastest Federal Reserve rate hike in history, right? We're now going through geopolitical risks, right? So,
Right.
people always ask, like, is it now a good time to start something? And I say, look, if you study history, which I like to, I read a lot of Ray Dalio, Big Debt Crisis and the Changing World Order, Howard Marks, Charlie Munger. I like all these guys because they have context. And if you look at any period of time in the United States or in the world, something was going on, right? So it's like, well, it can be a limiting belief to say, well, I'll start when things get better. You think about Uber and Amazon and a few of these big companies, Tesla, maybe even. Some of these companies were started in the worst economic times possible, right? Going to a third world country like Costa Rica really gave me perspective on just how much amazing opportunity we have here in the United States.
Right. Well, they always say, right, it's the best time to make money are in the worst economical times, right? You just have to be able to maneuver it.
Yeah, and you have to have confidence and courage and strategic insight. I think one of my, top talents is really pattern recognition. And the only reason that's the case is because I'm taking so much action, right? Like, I can't tell you every week somebody says, how the heck do you get it all done? I say, I don't. I have a team around me that helps, but then I focus. And two of my top talents are discipline, achievement, competition, right? Athletic, you can hear that athleticism
Right.
coming in. That's why I'm in this industry, right? There's a scorecard every single day,
Correct.
right? And so for me, I think it's really big to understand that, if you're in the flow of deals, of market analysis, of understanding economic indicators, demand drivers, you start to see patterns. And before the news hit the headlines, man, I was buying retail shopping centers in 2021 when people were saying retail's dead. I bought 5 of them and they're crushing it. Absolutely crushing it, right? Because I knew what was going on in the market that I'm in. And so that's the only way I have pattern recognition. If you're on the sidelines and you're not doing things, you're not taking action, and you're just reading headlines, it's very hard to see those patterns.
Sure. So let's start with your properties that you own. How do you manage them? Do you manage them yourself, or do you have a team that does that? You outsource it?
Yeah, so we use a hybrid approach on the multifamily properties. We manage some of the smaller units, but some of the larger complexes, we do outsource those. And then we manage everything on the commercial side. It's really, we have a 35-year veteran that can handle a lot of square footage, right? The breakdown of that is about 250,000 square feet of industrial, or about 300,000 square feet of retail, and about 50,000 square feet of office. And so with one person, we're able to manage all of that. Now, we do not do the leasing on that. So we outsource the leasing, but everything else is insourced.
So how is the office doing?
Yeah, office is doing great, right? I mean, we bought right on the streetcar. So one thing that I always try to do is I try to follow infrastructure, because I understand Ricardo's law of economic rent. And where infrastructure goes from a public standpoint, private dollars and private owners really benefit from that without having to pay for it. The taxpayer pays for it, right? Think about data centers right now. Where the infrastructure is, people are making a lot of money, okay? So utilities. Well, the streetcar was extending from Union Station all the way down to the plaza. And I knew it was going to stop right in front of an apartment complex that I bought, as well as an office building. And so while Midtown may not be the most ideal place for office, we own one of the only office buildings that has an elevator, that has parking, and it's along the streetcar line. Additionally, we were able to renovate that property, and we were able to get tenants in place. We have an MRI company in there. We had to blow out the wall. So we have really sticky tenants in that building, right? So we've owned that for about 4 or 5 years now. We're getting it filled up. The next tenant on the top floor, we're going to be filling that up here soon, and we're probably going to be selling that asset. But that specific asset has done well. I will tell you that some of the office assets that I have seen in Kansas City, if they're not highly amenitized Class A, they have been struggling. I think that's a national trend. But well located, highly amenitized, if you have parking, if you're close to restaurants and things like that, those office properties have been gone. Now, I'm not out there buying more office right now either.
Sure.
So
Sure.
That's the other thing. I think that a lot of the office, probably, close to 50-60% of the office in the United States is probably functionally obsolete, and there's a better use for that land. So that's why we're seeing these big conversions.
Sure. Now, when you buy these commercial properties, number one, do you always update them,
Most
remodel
of the
them?
time, we're value add investors, 100%. Yes. We have always looked for a good basis that we felt like if we improved, we could generate more net operating income. What's been a big challenge in commercial real estate, especially with some of the lease structures that are in place with some of these properties, is the rising costs of insurance and taxes. That's been a really non-controllable cost that has caused a big squeeze on a lot of NOI. Even if rents are going up 10, 12, 13%, it still is a big impact. And we've had some really interestingly terrible scenarios here in the Kansas City, Missouri area around taxes in Jackson County specifically.
Got it. Have you implemented AI in the management?
In the management side on the residential, we have. So, with AI bots, one thing I noticed was our leasing agents, they work 8 to 5, and on the weekends and after hours, leads were not being answered. So I went and got a company called ResPage. They're trained, their AI bot is completely trained on the rent roll. It's tied to our property management software, and somebody can text, email, call with that AI bot and get their answers immediately and instantly. And that has put a throughput of new leases coming through or applications about 15 to 16%.
Oh, great. That's amazing. Going to your brokerage side. So you have a team that you work with. I mean, you have a lot on your plate, obviously. I don't know how you get through the day without more emails coming through and, answering them. So how do you manage a team, and what is your primary focus in the brokerage?
Yeah. Well, I'm the rainmaker, right? So I'm the owner of the company as well as still bringing in about 80% of that business. My job, I look at my job as brand awareness, lead generation, relationship management, and then how do I get the 8 brokers that I have working on revenue generating activities on a regular basis. So it's really about coaching around prioritization. I run a company called the Brokers Mastermind. I have about 20, brokers across the country that come, and we teach how to implement AI and figure out market analysis, digital marketing, social media to be able to have that brand authority. Then you have an offer so good that it's stupid to say no to, right? And then you have the back end to service that leads, right? So that you show up and what you're working on is either prospecting or calling inbound leads. And when you can make that flip, it takes 5-6 years, right? This is a tough business to be in. But when you make that flip, it becomes fun because now you're problem solving, right? And you're taking one piece of information that's not connected to another or another person and bringing them together, right? So that's the brilliance of this industry. Being about 10 years in, close to 10 years in, a lot of that is starting to come in, as well as we're utilizing, I think, press releases and SEO and AI search very uniquely. I'll give you a prime example. On our podcast, we cover 5 municipalities: Lee Summit, Overland Park, Lenexa, Kansas, Lee Summit, Missouri, and Kansas City, Missouri's planning and zoning meetings every single month. So if you search Lee Summit, Missouri, planning and zoning meeting, my podcast will come up. Now, why did I do that? Well, developers, they want to know what's going on in these meetings, but those meetings are long. You have to go read the minutes. So I have built an AI bot to go in and listen to those meetings, generate a podcast script. I have cloned my voice to read that podcast clip, and then we have an SEO optimized, podcast transcription to show up in search. And so if you search that on AI or on Google, now I just got a message from my team, showed me an image. We're top 3, and if you search Lee Summit Planning and Zoning, my little podcast, the Kansas City Commercial Real Estate Market Pulse, pops up. So very cool, right? It's something that I think is really important because you have to be found in today's world, and the original SEO is still very good, but a lot of people are using this AI now, and so you have to be able to understand how to show up in these AI searches. So it's just fascinating. I feel like we're building a media company just like you, right alongside a real estate company.
Right. Absolutely. How do you see the market after COVID, what's happened? What do you see in the market for the next 2 years?
Yeah. So I'm going to walk you through transaction volumes starting in 2020. I track transaction volumes on a national level and then in Kansas City, Missouri, very, very closely, both leasing and sales. 2020 was about $435 billion worth of real estate. 2021 was a banner year, $876 billion. This is nationally.
Right.
2022, pretty good, $770 billion. 2023, interest rates go through the roof. Volume goes down to $378 billion. A little bit of a rebound in 2024, $392 billion. Big rebound in 2025, $545 billion. So what I believe is that in 2026, we will have a 15 to 17% increase on that $545 billion. The early indicators from Lightbox, they track the leading indicators. This is phase one environmental surveys being done. This is appraisals. This is new listings coming on the platform. They are at all-time record highs for January and February. Okay, so I do believe that this is this confluence of you have discretionary sellers who think that this is a good time to sell, as well as non-discretionary sellers that are being forced to sell because of their debt that was placed 5 years ago in 2020 and 2021. You have that confluence. Now we have a transaction, environment where more capital is being outlined. So I think there's winners and losers in this, as well as there's markets that are winning and losing in this. So it's a very much a bifurcated market. There, you cannot just say, well, all asset classes are doing great. Commercial real estate's doing wonderful. You got to peel back the onion. You got to look at the asset class. You got to look at the vintage of it, and you got to look at the location of it. But generally speaking, 2026, I feel very confident that transaction volumes are going to be very good. Now, I also love to read everything about the 18.6-year real estate cycle, which kind of lines up specifically with 2026 being a banner year. Okay, so I think that 2026 prices are going up. They're up 2.5% year over year from 2024. Transaction volumes will be up, but 2027 to 28, we might have a big reckoning.
Interesting. I like your perspective. Now, this last week, the prime did not get any reductions, and Jerome Powell was saying there might even be some increases. What's your perspective on that?
Yeah, well, everything that I focus on is on the 10-year treasury, right? And 10-year treasury jumped up to 4.3%, right? Well, it's really difficult environment when the price of a barrel of oil is $130. Now if anybody doesn't know that 90% of products in the United States have some sort of petroleum in them, they should go watch Landman, the show. It's a fantastic show.
I've seen it.
And Billy Bob Thornton does a wonderful job talking about how important that is. So I have all eyes on the 10-year treasury. Jerome Powell's going to be replaced. He's going to be replaced with a very smart individual. Now, that very smart individual also is going to have a lot of pressure, right? And there's a lot of pressure. So there's a lot of political environment pressuring things that goes on. However, the bond investors are really what are going to push, the 10-year treasury up or down. How do they feel where inflation truly, truly is, right? As well as what's going on geopolitically in the Hormuz Strait there. So I have all eyes on that, right? But what I will say, even with those interest rates, spreads have not blown out from the banks because the banks are more liquid. All right. I have a heat map that I run on a monthly basis. It has 5 indicators, okay? And one of them is the lending standards from the banks, okay? And in Congress right now, I think there's a big bill in there that would really, loosen those standards from the bank, increasing the liquidity in the market. So regardless of the 10-year treasury, there is going to be more capital available, and there are long-term investors that do see the opportunity to buy distressed assets. And so one thing that Peter Linneman and other people always say is date the rate and marry the deal. Okay, so I do think that is something we're obviously watching. It's squeezing some of those opportunities, but we primarily broker and do value add deals that do not have, fixed rate financing for a long time. They may be bridging that debt with a regional bank for 2 to 3 years, hoping that the refinance opportunity comes after they push the NOI. So for my specific business model, I would say that I feel somewhat confident in that. If you're doing mega deals, $50 million and up, That's really difficult because people are trying to clip a coupon and it can really squeeze some of those opportunities. So again, I think it's a nuanced market that we're in right now.
Great. I appreciate all the amazing feedback, all your knowledge that you gained over the last 10 years. Look forward to doing another podcast with you with what we see with housing with these geopolitical tensions and everything, and hopefully just be resolved. If you were to give the viewers one piece of advice, if somebody wants to start in the industry or maybe who's been experienced but is facing difficulties, what would you say?
Yeah, well, I think that some of the best advice I got was be quick, but don't hurry. There's a saying, there's an idea that real estate deals are like the city bus. If you're in the right place and you're in the right, you're kind of in the right zone, so to speak, there's another one every 15 to 20 minutes, right? And so I think that it's a numbers game. You have to be underwriting deals, getting offers out there, probably put out 100 of those offers. Probably takes 500 deals to look at to get to 100 offers to buy maybe 2 to 3 of those opportunities, So it's consistency, it's persistence, but it's also patience.
Great. Well, how can our viewers reach you?
I'm on LinkedIn every single day. We just crested 37,000 followers over on LinkedIn. So Mr. Kansas City, Logan Freeman. My website is www.mwcreadvisors.com. And I'm pretty easy to get access to. So feel free to reach out to me.
All right. Well, thank you for being on the show again, Logan, and look forward to seeing you soon.
Thank you so much.